Hello everyone, welcome to the sixth module of Goods and Service Tax Filings. In this module, we are going to learn about the other returns and compliances. So what we are going to study is the composition scheme and the different returns that are filed under the composition schemes. That is CMP-08 and GSTR-4. Then we will see the annual return that is required to be filed by those taxpayers whose turnover exceeds rupees 2 crore. Afterwards, we will see ITC-04, that is job work reporting, and we will learn how to view documents and download them from the GST portal. Like we can download the filed returns and other reports from the GST portal. Next, we will see the type of notices that are issued by the GST department and what are the different causes and how to respond to such notices upon the receipt of such notices. So before we proceed with today's session, let us quickly see what we learned in our previous module. So in our previous module, we learned about the GSTR-3B format and structure. We learned how to compute the output tax liability and how to set off the taxes using cash ledger and credit ledger. Then we learned about claiming input tax credit, what are eligible inputs, what are ineligible inputs, what are blocked credits and everything. Then we learned about the challan generation and making the online payment of output tax liability through PMT-06 challan. Then we learned about filing of nil GSTR-3B return. We studied who are required to file nil GSTR-3 return and what are the consequences of non-filing of GSTR-3B nil returns. Then we learned about how to reconcile the different set of data, that is how to reconcile GSTR-1 and GSTR-3B, then how to reconcile GSTR-3B and GSTR-2B. Also we learned how to reconcile the books with the GSTR-1, GSTR-2B and GSTR-3B. So now let us proceed with today's session. Our first topic under this module will be composition scheme, that is returns that are filed under the composition scheme. Like CMP-08, that is the quarterly return to declare the turnover and pay the GST taxes. Many times we refer GST taxes under the composition scheme as composition fee. Then we will see GSTR-4, that is the annual return against the composition scheme. So what we are going to learn under this module: what is composition scheme, importance of composition scheme, and CMP-08 and GSTR-4 returns. So what is the composition scheme? This we have already covered in our previous modules. So let us quickly recap what we have learned out there. Composition scheme is a simplified tax scheme for small businesses under section 10(1) for goods, under section 10(2) for restaurant services, and under section 2A for other services who are not eligible under section 10(1) and 10(2). So the turnover limit for availing this benefit is up to 1.5 crores, that is 75 lakhs in the selected states, that are the special category of states, and rupees 50 lakhs under section 10(2)A, that is for other services who are not eligible under section 10(1) and 10(2). So special category of states, we have already learned about the special category of states that has been notified by the government: Arunachal Pradesh, Tripura, Manipur, Meghalaya, Sikkim, Mizoram, Uttarakhand and Nagaland. The turnover limit for opting composition scheme applies to these states is rupees 75 lakhs. So let us see the fixed rate of GST that is required to be paid by the composition dealers. Section 10(1), the category of supplier that are covered under this section are manufacturers or any other. So manufacturers are required to pay 0.5% CGST and 0.5% SGST. That is total 1% of the turnover is to be paid as GST. Then for any other person also the rate is same, that is 0.5% under CGST and 0.5% under SGST. So these suppliers cannot do interstate business, that is they have to make the supplies within their own state. Then section 10(2). 10(2) governs the restaurant services. Under this, the rate applicable is 2.5% under CGST and 2.5% under SGST. So total 5% GST has to be paid on the total value of turnover within the state. Again, the restaurant services can also operate within their states and interstate transactions are not allowed. Then section 10(2)(a), that is other services. Under this, the rate of GST is 3% under CGST and 3% under SGST. Again, the transaction must be within the states. So the composition dealers cannot raise a tax invoice, rather they have to issue a bill of supply. They cannot charge GST in the invoices and the entire amount is inclusive of GST and they have to pay the GST on the amount mentioned in the bill. Also, the composition dealers are not eligible to claim any input tax credit against their purchases or expenses. So next is CMP-08. Let us have an overview of the CMP-08 return, that is the quarterly return for the taxpayers under the composition scheme. CMP-08 is a quarterly return cum challan. So a taxpayer is required to declare his quarterly turnover in CMP-08 and pay taxes at the applicable rates. So CMP-08 is a return cum challan. Then it is applicable from financial year 1920. CMP-08 has been introduced with effect from financial year 1920 and prior to that GSTR-4 was the return that was required to be filed by the composition dealers to declare their turnover and pay taxes. Now GSTR-4 is the annual return that is required to be filed by the composition dealers. Then composition dealers are required to file CMP-08 and GSTR-4. There are no exceptions, that is all the composition dealers must file their quarterly return and the annual return in the form of CMP-08 and GSTR-4 respectively. Then opting composition scheme. Who can opt for composition scheme? So a person at the time of registration under GST can opt for composition scheme. Also, if a taxpayer has already opted for a regular scheme, but later on if he wishes to opt for composition scheme, he can do so by filing a form, that is CMP-02, and opt for composition scheme, subject to the condition that his turnover has not exceeded the threshold limit. So next is CMP-08 filing details. So the due date of CMP-08 is 18th of the month succeeding the quarter. For example, if the quarter ends on 30th June, then the due date will be 18th of July. Then what are the contents that are required to be filled up by the composition dealers in CMP-08? Outward supplies, reverse charge inward supplies, tax payable, interest or late fee. So in the outward supplies, the taxpayer has to declare his quarterly turnover and the GST thereon at the applicable rates. Then reverse charge inward supplies. So inward supplies that falls under the reverse charge mechanism is required to be declared here and the GST on such inward supplies is required to be discharged by the taxpayer. Then tax payable. So the taxes on the total turnover plus the reverse charge inward supplies is required to be disclosed in the CMP-08 return, and interest or late fee due to late filing of previous period's return or late payment of taxes is required to be declared in CMP-08. Then CMP-08 on the portal, how to open and file the CMP-08 on the GST portal. Navigate to returns. Under the returns tab we have CMP-08 option. We have to select the CMP-08 option, then we have to select the period, that is the financial year and the quarter for which CMP-08 is required to be filed. Afterwards we have to enter the turnover and the corresponding rate of tax, which will calculate the total taxes payable on such turnover. And finally we have to submit the return, pay the taxes using the challan and finally upload the return using the OTP or DSC. So let us see GSTR-4 now. What is GSTR-4? GSTR-4 is the annual return for composition dealers. It is applicable from financial year 19-20 onwards. This we have already discussed, and the due date for filing of GSTR-4 is 30th June of the next financial year. That is, for the financial year ended 31st March 2025, the due date of filing of annual return will be 30th June 2025. What are the contents of GSTR-4? So GSTR-4 includes outward and inward supply summary, then import summary, tax under reverse charge, taxes paid via CMP-08 return cum challan, and late fee and interest amount. So the outward and inward supply summary consists of outward supplies, that is the sales made during the 4 quarters of the financial year, that is the sum total of all the sale made during the 4 quarter of the year. And inward supply summary includes the supplies from registered suppliers as well as from unregistered suppliers. For registered suppliers, GSTIN of each supplier and their corresponding total supplies during the financial year is required to be filled up. In case of unregistered supplier, the PAN number of unregistered supplier and the total supplies during the year has to be filled up, although PAN number is not a mandatory field. Then imports, any imports made during the financial year is required to be disclosed in this column. Then taxes under reverse charge, any inward supplies that are falling under the reverse charge mechanism is required to be declared in this table. And the taxes paid via CMP-08 form shall be auto-populated in this column, that is tax paid via CMP-08 column, and the late fee and interest for the financial year will be filled up in the late fee and interest column. Then what are the auto-populated data in GSTR-4? So most of the fields in GSTR-4 return will be auto-filled up, and the data will be popped up from first CMP-08, that is the quarterly return that has been filed by the taxpayer. So for all the 4 quarters of the relevant financial years, the data will be auto-populated in GSTR-4. Then GSTR-1 and IFF, the supplier of the goods will file their GSTR-1 or IFF, on the basis of which the inward supplies details will be auto-populated in GSTR-4 return. The unregistered supplies details will not be filled up, it has to be filled up by the taxpayer himself. Then GSTR-2A, the GSTIN details of suppliers will be auto-fetched from GSTR-2A. Then nil return to be filed if no business. So CMP-08 and GSTR-4 is also required to be filed if there are no transactions during the financial year, and a nil return has to be filed. So what are the common errors to avoid? Missing CMP-08 even for zero turnover. Even in case where there are no turnovers during the quarter, CMP-08 must be filed by the taxpayer. Then wrong turnover figures. The wrong turnover figures will ultimately lead to differences in taxes that was payable and the taxes that has been paid. So there will be a mismatch, and department will issue a show cause notice for such mismatch. Not filing GSTR-4. GSTR-4 is mandatory even if there are no turnover during the financial year. The annual return has to be filed by the composition dealer. Tax paid under wrong heads. It is likely that this error will not be there, as interstate supplies are not allowed for composition dealers, and hence the system automatically fetches the turnover under CGST and SGST heads. So the taxes will automatically be popped up in the CGST and SGST head. Then late filing penalties. There is late filing penalty for GSTR-4 and CMP-08. So 50 rupees per day is for GSTR-4 and 20 rupees for nil return. That is if there are no turnover. So what are the final tips? Maintain turnover records quarterly. All the sales must be recorded in the books of accounts, and proper disclosure of quarterly sales must be there in the CMP-08 return. then reconcile before GSTR-4 before filing of the annual return. The total sale must be reconciled, and any differences, if there are any shortfalls in the CMP-08, then it must be paid at the time of filing of GSTR-4 return. Then file CMP-08 before GSTR-4. The last quarter's CMP-08 or the pending returns of previous quarter, CMP-08 must be filed before the filing of GSTR-4 return, or there will be a mismatch as the data in GSTR-4 will not be popped up from the non-filed CMP-08 returns. Use auto calculation on GST portal. Compute liability is a functionality available at the end of filing of GSTR-4 return. It must be used to compute the final liability as per the data filled up by the taxpayer. Then set due date reminders. So due dates for quarterly return and annual return must be there in the calendar of the organization so as to avoid any late fee, penalty, interest, etc. So moving ahead, compliance flow. CMP-08 quarterly we have to file the CMP-08, that is 18th July, October, January and April. Then GSTR-4 annually 30th April was the due date up to financial year 23-24. With effect from financial year 24-25, the due date has been revised to 30th June. Then payment should be made through CMP-08 and the liability should be set off. Then issue bill of supply only. Tax invoices cannot be raised by composition dealers, and only bill of supply can be raised as no GST is charged in the invoice. Then no ITC or tax invoice. Again, the composition dealers cannot claim any input tax credits against their purchases. So to summarize, CMP-08 is a quarterly tax declaration and payment return. Then GST-4 is the annual summary return. It has to be filed by all the composition dealers, and it is a crucial matter for compliance under GST. So proper reconciliation of books and turnovers, that is turnover for the financial year, must be kept on records. So before we conclude with this topic, let us quickly see on the GST portal how CMP-08 and GSTR-4 is accessed and filed. So here we have logged into our account. This is a composition dealers account and this is the home page. So again we have to go to the return dashboard. Here we have to select the period, for example financial year. Let us select the last quarter 24-25, fourth quarter January to March. Let us search here. Statement for payment of self-assessed tax GST CMP-08. This is the CMP-08 that has to be filed by the taxpayer. So this we have filed. So let us view this. This is the CMP-08 return. In this return, if there are no turnover, then we have to click here, file nil GST CMP-08 return. We can simply tick on this checkbox and proceed to file the nil return. But if we have turnover, then we have to report the outward supplies including exempt supplies. Here we have to report the total turnover for the period. Then there will be central tax and state tax. Then inward supplies attracting reverse charge including import of services. Here we have to report the inward supplies that attracts reverse charge and corresponding taxes. Then this will be tax payable. Here we can see this is the total turnover 26,06,378. 0.5% comes to 13,032 rupees and 13,032 rupees under each head. Then here is the interest payable if any. So if we have filed the previous period's return belatedly, then interest will get auto calculated here. Then we have to create the challan and make the payment. Let us see the filed CMP-08 return. So let us download the return first. So here we have downloaded the file CMP-08 return. This is the CMP-08 return for the quarter ended March 25. Here's the detail. Outward supplies, we have declared this our outward supplies for the quarter. This is the tax amount 13,032, 13,032, and here's the verification. That's it. So now let us see the GSTR-4, that is the annual return. Again we have to go to the services, then returns, return dashboard. Services, returns, and here is the option for annual return. So for financial year 24-25, we have to search. We have already filed the annual return, that is GSTR-4. Let us open. So this is the aggregate turnover for the financial year. This is total turnover for the 4 quarters. Then select the tables to add or view details. These tables are required to be filled up by the taxpayer. First one is inward supplies from registered supplier or e-commerce operator other than reverse charge. Taxpayer to report. So the taxpayer has to report the inward supplies from registered suppliers. Then inward supplies from registered suppliers that belong to reverse charge category. So that has to be reported in table 4B. Then in 4C, inward supplies from unregistered supplier. Here we have to declare the unregistered purchases. Then import of services, summary of CMP-08. This is the auto-populated data from the CMP-08 of all 4 quarters that have been filed by the taxpayer. Then tax rate wise outward or inward supplies. This is the total sales to be reported and TDS TCS credit received if any. So this is the annual return format, and these are the tables that are required to be filled up by the taxpayer while filing GSTR-4. So let us again download the file GSTR-4 return and see what details have been filled up. So we have downloaded the annual return. This is the annual return. So here are the GSTIN details. Then table 4A, inward supplies received from registered supplier. This is the total purchases from the registered parties. Then inward supplies received from a registered supplier attracting reverse charge. We do not have any transaction, so we have not reported anything in this. Then inward supplies received from unregistered supplier. We have reported rupees 1,32,772 as supplies received from unregistered vendors. Then import of services, we do not have any data. Then summary of self-assessed liability as per form CMP-08. This is the auto-populated data from the CMP-08 that have been filed by the taxpayer. So total outward supplies is this, against which the tax liability is 50,561 and 50,561 under each head. This is the auto-populated data and this is the declared amount that by the taxpayer. Then consolidated details of outward supplies or inward supplies attracting reverse charge. Outward supplies, inward supplies and total. Then reconciliation, if any, there is a difference of 7 paise as per the auto-populated data and as per the declaration made by the taxpayer. So this is the final GSTR-4A that has been filed by the taxpayer. So that's it for today's session. Thank you.